When examining the complex trade relationship between India and Bangladesh, it becomes immediately clear that the balance is overwhelmingly tilted in India's favor. In the most recent fiscal years, India's exports to Bangladesh have consistently dwarfed its imports from the neighbor to the east. For example, in the fiscal year 2023-24, India exported goods worth approximately $11.06 billion to Bangladesh, while imports from Bangladesh hovered at just 1.0 to 1.9 billion. This translates to a substantial trade surplus of about $9 to $10 billion in India's favor, underlining the economic advantage India currently enjoys. This trade surplus is grounded in the diversity and scale of Indian exports. India supplies Bangladesh with a vast array of goods, including food grains, cotton, machinery, chemicals, iron and steel, and refined petroleum products. These exports fulfill key demands in Bangladesh's rapidly growing economy, supporting sectors as diverse as textiles, construction, and transportation. On the other hand, Bangladesh's exports to India are comparatively limited, focusing mainly on ready-made garments, jute and jute products, leather, and frozen fish. Not only are the export volumes smaller, but the product range is also far narrower. The implications of this imbalance are profound. Should India ever choose to disrupt or halt trade with Bangladesh, it would be India itself that stands to lose the most. Bangladesh represents one of India's largest and most reliable export markets. The loss of this market could not only impact India's manufacturing and agricultural sectors, but also send ripple effects across industries dependent on Bangladeshi demand. In contrast, Bangladesh's reliance on Indian imports is far less rigid than it might appear on the surface. Bangladesh has, over the years, systematically diversified its sources for raw materials and essential goods. For instance, the backbone of Bangladesh's economy, the ready-made garment sector, relies heavily on imported cotton. While India is a key supplier, Bangladesh also sources cotton from China, Pakistan, Vietnam, and various African countries. In the event of a trade disruption, it would not be insurmountable for Bangladesh to pivot to these alternative suppliers. In fact, global cotton producers are often eager to expand their market share, and Bangladesh, as a major buyer, holds significant bargaining power. The story is similar when it comes to machinery and spare parts. While India does supply some industrial equipment, the dominant suppliers are China and other ASEAN countries. Bangladesh's dependence on Indian machinery is, therefore, minimal. In the sphere of food grains and essential commodities, Bangladesh has steadily increased imports from nations such as Thailand, Vietnam, Myanmar, and several African exporters. The country's import policy has been deliberately crafted to minimize vulnerability to supply shocks from any single nation, including India. This flexibility extends beyond goods to the realm of human capital. Thousands of Indian professionals, including engineers, doctors, IT specialists, and managers, have found lucrative opportunities in Bangladesh. Their remittances flow back to India, representing a subtle but important economic benefit for the country. Should bilateral relations deteriorate, Bangladesh could easily look to China, ASEAN nations, or Western countries to fill professional gaps. The net result? A significant loss of remittance income for India, and a missed opportunity to exert soft power in the region. Tourism, too, is an area where India's dependence on Bangladesh is more significant than commonly recognized. In recent years, Bangladesh has emerged as the second-largest source of foreign tourists to India, surpassed only by the United States. In 2023, over 2.1 million Bangladeshi tourists visited India, contributing substantially to India's hospitality, retail, and transportation sectors. However, amid political upheavals in Bangladesh and rising diplomatic tensions, including the attack on the Bangladesh Assistant High Commission in Agartala in December 2024, tourist numbers have declined sharply. In 2024, Bangladeshi arrivals in India dropped to 1.69 million, a 20% decrease from the previous year. The impact of this decline is felt acutely in border states and metropolitan cities that cater to Bangladeshi visitors. A major component of this tourism is medical travel. Bangladeshi patients have long relied on Indian hospitals for advanced and affordable health care. Yet this dependency should not be mistaken for exclusivity. Neighboring countries such as Thailand, Malaysia, Singapore, and China are aggressively expanding their medical tourism industries. They offer competitive pricing, modern facilities, and streamlined visa processes. If Bangladesh were to redirect even half of its medical tourists away from India, the repercussions would be immediate for Indian healthcare providers, especially in cities like Kolkata, Chennai, and Bangalore, that have built thriving businesses around foreign patients. Beyond economics, the geopolitical consequences of antagonizing Bangladesh are severe. Bangladesh occupies a strategic position on the Bay of Bengal, a region where global powers are vying for influence and access. Alienating Bangladesh risks pushing it closer to China and Pakistan, both of whom are eager to expand their footprint in South Asia. China, in particular, has invested heavily in Bangladesh's infrastructure, energy, and manufacturing sectors. A breakdown in India-Bangladesh relations could see China stepping in as the preferred partner for trade, investment, and even security cooperation. This scenario would directly undermine India's Act East policy, a cornerstone of its strategy to enhance connectivity and economic integration with Southeast Asia. Bangladesh is central to regional transport corridors, energy grids, and digital networks that connect India to the wider Asian market. Losing Bangladesh's cooperation would weaken India's regional standing, making it harder to project influence and safeguard its interests in a rapidly evolving geopolitical landscape. Recent events underscore the fragility of these ties. The ousting of Prime Minister Sheikh Hasina in August 2024 introduced a period of political uncertainty in Bangladesh. While trade volumes have remained resilient, Bangladesh even increased imports from India to $11.45 billion in the first quarter of India's 2024-25 fiscal year. Other aspects of the bilateral relationship have suffered. The decline in tourism, the suspension of visa and consular services following the December 2024 attack, and the broader diplomatic chill all point to the potential cost of letting relations deteriorate. In contrast, Bangladesh's position is strengthened by its ability to diversify. The country has cultivated a wide network of suppliers and investors from China, the European Union, ASEAN, and the United States. Its garment industry, the engine of its economy, is deeply integrated with global supply chains. Bangladeshi policymakers have shown a willingness to pivot away from Indian suppliers when necessary, leveraging international competition to their advantage. The same flexibility applies to tourism and medical travel. As alternative destinations become more accessible and affordable, Bangladeshi citizens have little incentive to remain dependent on India. For India, the stakes are much higher. The country stands to lose billions in export revenue, remittances, and service sector income if it antagonizes Bangladesh. The economic hit would be compounded by a loss of strategic leverage in South Asia. India's domestic industries, agriculture, textiles, chemicals, and more, would feel the pinch as they scramble to find new markets for their goods. Conversely, Bangladesh's adaptability and global connections mean that the impact of losing Indian imports would be mitigated by swift realignment with other partners. The bottom line is clear. India's prosperity and regional influence are closely linked to the maintenance of strong, stable relations with Bangladesh. The economic gains from trade, the soft power accrued through professional and medical exchanges, and the geopolitical benefits of friendly ties all argue for a policy of engagement rather than confrontation. By contrast, Bangladesh enjoys strategic alternatives and the backing of global partners, giving it the flexibility to navigate disruptions with relative ease. In this context, any move by India to disrupt or curtail trade with Bangladesh would be a strategic miscalculation of the highest order. The costs to India's economy, its regional ambitions, and its international reputation would far outweigh any perceived short-term gains. The path forward lies not in threats or antagonism, but in deepening cooperation, fostering mutual trust, and building a partnership that reflects the true interdependence of these two neighbors.